Hello everyone, today we are going to take a detailed look at the order block. I will explain how and why it's formed and how it's used. You will learn how to find it correctly. I will also tell you what factors you need to consider when searching for an order block. This method is very effective and easy to use. An order block is the candlestick that shows purchases or sales of large capital. When a bullish order block is formed, an accumulation or reaccumulation takes place in order to further mark up the asset. After you have traded a large volume, there will always be traces on the chart, and we can find them in order to open a position in the direction of further price movement. The diagram shows a bearish order block. This is the last rising candle which removes the liquidity to buy and then is absorbed. The absorption confirms the order block. At this point, we can consider entering the position without waiting for the retest. The stop loss will be placed above the shadow of the last rising candle. If the price goes beyond this high, the order block will lose its relevance. In addition to liquidity, withdrawal and absorption, there are additional factors to consider. We want the price to reach the problem area after liquidity update to buy, from where the market reversal can be formed. The ideal will be if the price after the liquidity withdrawal aggressively starts to fall and breaks the ascending structure. This will be confirmation of order block and additional factor that smart money is going to make markdown of the asset. I recommend taking these factors into account if you want to have a high probability of an order block working out. In order to mark the order block correctly, we need to take into account the candlestick shadows on both sides. The highlighted candle is the area where we want to see the price action. Many people have heard that the order block is marked from the candlestick body to the shadow, but there are some subtleties. If we have an imbalance, the order block is marked from shadow to shadow. If after the order block is absorbed, next candle overlaps imbalance. It's better to mark order block from candle's body to highest point, as shown in the example. What to do if shadow of candle confirming the order block is higher? What to do in this situation? In this case, the upper limit of the order block will be at the maximum of a bearish candle, as shown in the example. The stop loss should be set beyond the maximum of the order block. Why does the order block work? The point is that this is how big capital closes its long positions to break even. Long positions that were opened on the trend before the structure broke in order to remove sell stops liquidity. Order blocks are candlesticks which remove liquidity. Not every candle is an order block. This shouldn't be forgotten. The bullish order block works the same way, but in a mirror image. Once the price takes liquidity to sell, the bearish trend is absorbed and broken. Once the trend breaks, the order block is confirmed. You can see also intraday without waiting for the structure to break. Thus, the number of trades will increase, but the risk of losing trades will also increase. Which trading style is more preferable for you is up to you. Since principles of a bullish or bearish order block are the same, I will not analyze the example in detail, but will review the basic principles of order blocks forming. You can see them on the screen. There are usually two options for entering a position from an order block. The first is entering from the beginning of order block and entering from 50% of order block. The entry from 50% is safer, but it is important to understand that sometimes your orders will not to be executed and the price will go without you. Choose for yourself the most convenient option to enter a position. The order blocks doesn't work separately. When analyzing, it is worth taking into account the main price movement, as well as the areas on the chart where liquidity is located. And the less factors you take into account when analyzing the chart, and including when searching for an order block, the less profitable deals you will have. So let's start practicing. As I said before, the order block doesn't work well separately from other analysis tools. So let's do a quick analysis of the weekly time frame of Bitcoin Tether trading pair. On the weekly time frame, we are in downtrend. According to the preliminary analysis, we see that the price has now received a reaction from the weekly order block and begins to correct within the downtrend. At the bottom, we have sell stops liquidity. We also note buy stops liquidity before the imbalance. Given the analysis of the monthly time frame, we expect buy stops liquidity to come out and fill the imbalance. After that, we mark the order block. After checking the order block, the first target will be sell stops liquidity and second target will be the weekly time frame imbalance. On the chart, we see price consolidation and removal of internal liquidity from the past high. Given the context, it is worth looking for a trade entry into a short position. In this case, the order block is the last bullish candle after which the impulse movement in the opposite direction began. In addition, the structure of 4-hour time frame was broken. When you use order blocks in sync with the older time frame and consider liquidity, you will see that order blocks work great. You just need to look for them correctly. Not every absorption candle is an order block. Therefore, first of all, pay attention to those zones of the chart where liquidity is removed. I hope this video was useful to you. Thank you for watching. Goodbye.